One of the biggest misunderstandings about this conflict is the assumption that both sides are equally eager to return to negotiations. At this stage, that's unlikely. From Tehran's perspective, every additional week of fighting may improve its position at the bargaining table. As long as Iran believes time is increasing the pressure on Washington, it has little incentive to rush into another agreement. Some analysts even argue that accepting the June 17th understanding may have come too early, because continuing the confrontation could have strengthened Iran's negotiating position even further. That doesn't mean diplomacy is dead. History shows that prolonged conflicts eventually force both sides to reconsider their options. Military pressure has limits, economic costs accumulate, and sooner or later, both governments must decide whether continued escalation is worth the price. The question isn't whether negotiations will happen, it's under what conditions they begin. If talks do resume, however, they are unlikely to resemble the previous round. Trust has become a far more significant obstacle than before. Many decision makers in Tehran now believe earlier commitments failed to produce lasting results, making future negotiations considerably more difficult. That shift has also changed the balance of influence inside Iran. Officials who previously supported diplomatic engagement now face stronger opposition from those arguing that a tougher approach is the only effective strategy. As the conflict continues, that harder line is likely to gain even greater political influence, giving Iran additional confidence to demand more favorable terms in any future negotiations. If negotiations eventually resume, and most long-running conflicts eventually return to diplomacy, the environment will be very different from the last round. From Iran's perspective, recent events have fundamentally changed the balance of leverage. Officials in Tehran are unlikely to approach future talks with the same flexibility they showed before. Instead, they are expected to demand stronger guarantees and fewer promises that depend on future political decisions in Washington. One issue almost certain to receive greater attention is control over key maritime routes. Iran may seek language that better reflects its strategic influence in the region while pushing for commitments that reduce the risk of another breakdown in negotiations. Financial issues are also likely to become far more important. Rather than accepting phased implementation, Tehran could insist that major economic concessions, such as access to frozen assets or sanctions relief, be delivered much earlier in the process. The reasoning is straightforward. After previous agreements unraveled, confidence in delayed commitments has been severely weakened. Regional security questions may also become part of the discussion. Instead of focusing only on the nuclear file, Iranian negotiators could broaden the agenda by raising military deployments, neighboring conflicts, and the role of U.S. allies throughout the Middle East. Whether those demands are accepted is another question entirely, but the negotiating position itself is likely to be far more ambitious than before. That creates a difficult challenge for Washington. Any future agreement may require political compromises that are considerably harder to defend domestically than those considered only months ago. Public opinion is another factor policymakers can't ignore. According to a Washington Post poll referenced in the discussion, support for the administration's handling of Iran had fallen sharply, suggesting that many Americans remained unconvinced by the overall strategy. If those numbers continue moving in the same direction, the political pressure surrounding future negotiations could increase significantly. Supporters of this view argue that the conflict has not produced the decisive outcome many expected at the beginning. Instead, they believe the regional balance has shifted in unexpected ways, forcing both sides to reconsider their assumptions before returning to the negotiating table. Another consequence that's receiving far less attention is how the regional balance has changed. Supporters of this analysis argue that Washington entered the conflict expecting to strengthen its strategic position in the Middle East. Instead, they believe several of its traditional advantages have become less certain. Military infrastructure has come under greater pressure. Regional partnerships have become more complicated, and allies are increasingly weighing their own security interest. According to the interpretation presented in this discussion, an earlier memorandum of understanding assigned Iran a significant security role during the negotiation period, while leaving any long-term arrangement to future discussions involving the regional coastal states. The speaker argues that the agreement did not explicitly grant the United States authority over the waterway. Instead, He contends that later efforts by Washington to escort or monitor commercial shipping through routes near Omani waters became a major source of confrontation, with each side responding to the other's actions and creating the cycle of escalation seen today. From that perspective, the current dispute isn't simply about military strength. It's about competing claims over security responsibilities, freedom of navigation, and who ultimately has the ability to influence one of the world's most strategically important maritime choke points. Even though political leaders continue making conflicting public statements, supporters of this analysis argue that actual control over the strait depends less on official declarations and more on which side can realistically shape events on the water without triggering an even wider regional conflict. That assessment leads to a much broader strategic question. Even if Washington wanted to change the situation militarily, does it actually have the resources to do so? Supporters of this view argue that the answer is far less certain than many assume. They contend that controlling a narrow waterway isn't simply about possessing the world's largest military. It's about whether that military can operate there continuously against an opponent with geographic advantages, layered missile systems, drones, and coastal defenses. From this perspective, the challenge isn't winning a single engagement. It's maintaining long-term control without paying an unsustainable price. The discussion then shifts to another issue that receives far less public attention: military stockpiles. According to the speaker, modern conflicts consume precision-guided weapons at a pace far beyond what many governments anticipated. The opening weeks of the campaign relied heavily on air power and long-range strikes, requiring large numbers of expensive missiles and precision munitions. The argument presented is that these operations gradually reduced available inventories while failing to produce the decisive outcome planners expected. The speaker also points to earlier military operations in the Red Sea as part of the same pattern. He argues that sustained strikes against Houthi forces required additional interceptors, cruise missiles, and other advanced weapons, further increasing pressure on existing stockpiles. His broader point is that these systems are highly sophisticated and extremely costly to replace, and unlike conventional ammunition, they cannot be replenished overnight. According to this analysis, the issue extends well beyond the Middle East. Every interceptor launched and every long-range missile expended is one less available for other strategic commitments. The United States must also consider its obligations in Europe, where support for NATO requires significant military resources, and in the Indo-Pacific, where planners continue preparing for potential contingencies involving China. From that perspective, the debate is no longer just about one regional conflict. It's about whether prolonged military operations in one theater reduce America's flexibility to respond effectively somewhere else. Another concern raised by the speaker is the long-term strain on military resources. His argument is that every interceptor, cruise missile, and precision-guided weapon used in one conflict is no longer available for another. In other words, defense planners may eventually face difficult choices about where limited stockpiles should be allocated. If operations in the Middle East continue for months rather than weeks, maintaining the same operational tempo becomes increasingly expensive, not just financially, but strategically. The speaker suggests that this creates a difficult balancing act, as military resources needed for one region may reduce readiness in others. That naturally leads to another question. What role do Iran's regional partners continue to play? According to the analysis presented, these groups remain an important part of Tehran's broader regional strategy. The speaker argues that Hezbollah continues to tie down Israeli forces in southern Lebanon, preventing Israel from fully achieving its military objectives there. He makes a similar point regarding Hamas, arguing that although its operational capabilities have been significantly reduced, it has not been completely eliminated. In his view, the continued survival of these organizations demonstrates that military campaigns alone have not fully achieved their intended political objectives. He also highlights the Houthis as another major factor in the regional equation. According to the speaker, their ability to threaten shipping routes and energy exports extends the conflict beyond the battlefield and into the global economy. Rather than focusing only on military targets, these actions can increase pressure on international trade, shipping costs, and energy markets. From this perspective, Tehran's relationships with regional partners are not simply political alliances. They function as part of a broader strategy that allows pressure to be applied across multiple fronts simultaneously. The discussion then turns to the potential economic consequences. The speaker argues that if Saudi Arabia's ability to export crude oil were significantly disrupted for an extended period, the effects would extend far beyond the Gulf region. Saudi Arabia is one of the world's largest oil exporters, and a sustained interruption in shipments could tighten global supplies, increase transportation costs, and place additional upward pressure on energy prices. In his assessment, the consequences would not remain confined to the Middle East. They would ripple through international markets, affecting inflation, manufacturing costs, financial markets, and consumers around the world. Whether that scenario ultimately materializes depends on how long the disruption lasts, but the speaker's broader point is that regional conflicts involving major energy producers rarely remain regional for very long. The discussion then shifts from military operations to the global energy market, where the speaker argues the full economic impact has yet to be felt. According to the analysis presented, global oil prices have remained lower than many analysts initially expected, because a portion of Gulf exports continued reaching international markets despite the conflict. Before the latest escalation, roughly 1/5 of the world's daily oil supply moved through the Persian Gulf. Although significant volumes were already being disrupted, the speaker argues that alternative export routes allowed millions of barrels per day to continue flowing, preventing an immediate supply shock. Saudi Arabia, for example, was still able to move part of its production through pipeline infrastructure leading to ports on the Red Sea, rather than relying entirely on the Strait of Hormuz. At the same time, the United Arab Emirates continued exporting crude through facilities located outside the Gulf itself. According to the speaker, these alternative routes acted as an important safety valve, helping stabilize global markets even as tensions increased. The concern, however, is that those remaining export corridors may no longer be as reliable as they once were. The speaker argues that if shipping from Red Sea ports and alternative terminals were also significantly disrupted, the amount of oil reaching global markets could fall much more sharply than investors have previously priced in. In that scenario, the issue would no longer be a regional shipping problem. It would become a global supply problem. The analysis also points to another factor that has helped moderate prices: strategic petroleum reserves. According to the speaker, several governments have relied on emergency stockpiles to increase supply and reduce pressure on energy markets during periods of disruption. While those reserves can cushion temporary shocks, they are not an unlimited resource. As inventories decline, governments have less flexibility to offset future supply interruptions. From the speaker's perspective, this is where the real economic risk begins. If reduced exports coincide with shrinking emergency reserves, energy markets could become significantly more sensitive to even relatively small disruptions. That combination, he argues, would increase upward pressure on oil prices, transportation costs, and inflation, with consequences extending well beyond the Middle East into the broader global economy. The conversation then turns to Israeli domestic politics. The speaker argues that the country's political landscape has become increasingly uncertain, raising questions about the stability of Prime Minister Benjamin Netanyahu's governing coalition. While he suggests the Prime Minister faces significant political challenges and a competitive electoral environment, he also cautions against assuming the outcome is predetermined. In his view, Netanyahu has repeatedly demonstrated an ability to survive politically even when his position appeared weakened, making any prediction about Israel's next election far from certain.